All right, bull runners, welcome back to the channel. So in this video, we're going to be talking about a simple moving average trading strategy for XRP. We're going to be getting into what is a moving average, how are moving averages calculated, the different types of moving averages, which one is going to be best for you in your trading strategy, and also for those of you that are wondering how to trade Ripple XRP, what's going to happen next in the markets. We're covering all of that in this video. So if you want to see more videos like this, make sure to give this video a like, subscribe to the channel. And a lot of people have asked, is it possible to turn $10,000 into over $1 million in the crypto market? Although we make no guarantees, again, don't buy, don't sell anything. I want to share with you how I was able to do it during the last bull run and a practical and realistic approach for the beginner that's getting into the cryptocurrency market right now for this bull run. So you can be able to maximize your results and minimize your losses in these markets. Because as you guys know, the cryptocurrency industry is very, very volatile. We can see massive price fluctuations to the upside, but also we can see massive price fluctuations to the downside. And fortunately, and unfortunately, you can make a lot of money, but you can also lose a lot of money. So this video is designed for those of you that want to preserve your capital and have a long-term approach while also minimizing your risks and chances of losing money in these markets. And then also by the end of this video, I'm going to give you my forecast for where I see XRP going in the near term, in the medium term, in the long term. So comment 777 if you're feeling blessed, if you're feeling bullish, and let's run it. All right, so in order to understand how to make money in crypto using moving averages, we got to understand what is a moving average first. Moving average simplify and smoothen price fluctuations, reducing the noise and giving you a better idea of which direction the market is going and where it might potentially go in the future. And when you can reduce noise from a chart, it'll give you a much clearer picture of what is happening, and so you don't get overwhelmed. And while moving averages are incredibly useful, you need to be aware that they don't predict future performance. Rather, they confirm established trends that have happened in the past, and that'll give you an understanding of what could happen in the future. And as always, we don't make guarantees, because as you're going to see over the next few minutes, sometimes it doesn't play out exactly as you would expect, but having a better understanding will make you more proficient at having a higher likelihood to succeed. So in this video, we're going to use TradingView. And if you want to create a free TradingView account, you can use the link in the description below. Yes, that is our affiliate link. We do earn a small percentage, and that helps fuel value-based videos like this. So if you guys go through that link, you create your free account. There is a paid version as well too. It's optional. It does have more options for those of you that want to take this seriously and start learning trading full time. But in this video, I'm going to be giving you the bare bone basics. So after you create your TradingView account, you just enter in your username, password, like you would like a Facebook or Instagram account. What we're going to do is at the top, you're going to see on the upper left-hand side, the symbol search, and you can do stocks, funds, futures, Forex, crypto, indices, bonds, and the overall economy. You can check out lots of different stuff on TradingView. So you're going to click crypto, and you can look at any pair that you want. So for example, Bitcoin to the US dollar is the most common in crypto. And then you'll see the exchange on the right-hand side, like Bitstamp, Coinbase, Binance, Crypto, Bitfinex. So each of these exchanges generally have different timeframes of when they listed that currency. So most of the time, if you want to go as far back as possible, you're gonna pick the most popular exchange. So in this case, I'm on Bitstamp. You can also use Coinbase or Binance, or in this case, you could do XRP to the US dollar on Bitstamp, and you just click it. It'll bring up the chart. And in order to add moving averages, I'll show you how to do that. First and foremost, I want to talk about Bitcoin because the markets move off Bitcoin, and we're going to look at golden crosses and death crosses. So in order to add moving averages to your chart, at the top, you're going to see where it says indicators. You click on indicators, and you're going to type in moving average. And what you're going to notice is when you click on technicals, you're going to see a bunch of different options, like the simple moving average, the weighted moving average, or the exponential moving average. So for this example, I'm going to click on moving average simple 3 times. And on the left-hand side, you're going to see 3 different moving averages, which represent different time frames, and how you can adjust your moving averages, such as the color or the size or the weight or the thickness of the lines to be able to see it easier, is on the left-hand side where you see the SMA, you see a little eye icon to turn them on and off. You also see the little gear icon that says settings. You're going to click settings. You're going to click inputs, and you're going to turn the first one to 50. Then you're going to click style. You're going to click the color. You're going to choose blue. You're going to choose the thickness that you want. That way it makes it easier to see it. So choose the third one, click off, and then click OK. Now hover over the moving average below that, click the setting icon again. For the length, enter 100. For the style, turn it to red and enter the same thickness. For the third moving average, hover over the settings. For the input, put 200. For the style, turn the color to yellow or any color that isn't blue or red. Choose the same thickness and then click OK. All right, now you have 3 different simple moving averages up on the chart. On the right-hand side, you're gonna see another chart. Now this is the paid version. Again, when you guys create your free account below and you upgrade your account to the paid version, you can add more charts, more indicators, lots of different stuff that will help you become a better trader. So how is a moving average calculated? Well, moving averages are calculated by summing up the previous data points, or candles in this case, which are then divided by the number of points. So what does this mean? Points, right? Well, a 200 moving average is derived from summing up the previous 20 periods or candles and divided by 20. The 100 moving average is derived by summing up the previous 100 periods divided by 100. So for example, on the XRP to the US dollar price chart, in the upper left-hand corner, you're gonna see the pair, XRP to the US dollar. You're also gonna see the time frame. So it says D for day. When I click that, I can choose 1 second to 30 seconds, 1 minute to 45 minutes, 1 hour to 4 hours, then 1 day to 12 months. And so depending on which time frame you select is going to determine macro or micro market trends. So if you plan on doing like swing trading or day trading, you would use like the 1 minute to 45 minute, all the way up to maybe the hour or a couple hours. And then if you're a macro market investor, you would use like the 1 day, the 3 day, the 12 day, the 1 week, and the 1 month for long-term holding periods. So I'm going to talk about both in this video, and then we'll make more videos getting into more intricate details. So for example, you can see this blue line right here, and it's the simple moving average. It says it's at 0.51348. So what this is doing is this is calculating depending on the length of the moving average, where in this case it says 20. If I change it to 50, it calculates the previous 50 days on where each candle closed at, and then it adds them together and divides it by 50 to determine the moving average. And so if I'm going to use like a 100-day moving average, it would calculate 100 days worth of candles, or periods in this case, right? And how it calculates this is it takes the close of each candle body on the selected time frame. So in this case, it would be the day. So if we're looking at this massive bearish candle right here, for a bearish candle, the open of the day is always the top of the candle. So in this case, it'd be 0.49679, and the close of the candle is always the bottom of the candle body. Then you see this really thin line below the candle, and then above it, that's called the candle wick. And then the candle wicks to the downside just simply means how low the price got during the day. And then the candle wicks to the upside mean just how high the price got. But where the candle opened and closed is the thicker portion of the body. So in this case, on the 11th of September of this year, well, the open of this candle was around 0.49671, and the close of this candle was 0.47422. So what TradingView does is it takes the close of each candle for 20 days, depending on which time frame you're looking at. So the close of this candle, 0.47426. The close of a bullish candle is always the top of the candle body, whereas the open is the bottom. So it's just the reverse of a bearish candle. So in this case, TradingView would take 0.48028 for this candle. It would take 0.48326 for this one. And for this candle, it'll take 0.48839. And then it does that over the course of 20 candles, and that's how it comes up with this blue 20-day moving average. And so when you combine moving averages together, such as the 200 moving average with the 50 moving average, you can see things like golden crosses and death crosses. Now, a golden cross is simply when a lower time frame moving average, like the 50 moving average, crosses above the higher time frame moving average, which in this case would be the 200 moving average. Whereas a death cross is just the opposite, right? You'd have the 50 moving average crossing below the 200 moving average. And while golden crosses and death crosses are important to understand, you're not using them as the only thing when looking at moving averages to determine what's going to happen for price action. Because for example, a lot of traders talk about golden crosses being bullish. Well, if you were to buy this golden cross right here for Bitcoin at $24,000, and the price dropped down to $21,000, you would have to be holding for an extended period of time to see any gains on a trade if you're planning on day trading, right? We're on the daily candles, but ultimately right here, we can also see points of rejection and confirmation on these moving averages. And so you want to adjust the time frames depending on which moving average you're using to see if the price is reacting to it. So for example, on the daily for Bitcoin, we can see the price reacting to the 200 moving average right here, treating it as support, and then also treating it as resistance up here. So when we see the golden cross take place with the 200 moving average crossing below the 50 moving average, Bitcoin went on a bull run after that. And then also if we see right here a death cross take place with the 50 moving average crossing below the 200 moving average, a lot of traders expected a sell-off to happen for Bitcoin and Bitcoin to go down to, $24,000, $25,000 to even drop below there. But that didn't happen. On the right-hand side with this golden cross, we saw, something similar happen to February of this year, where we saw Bitcoin rally up on out of there. Whereas the death cross, we saw Bitcoin rally into the death cross and then drop after the death cross. So right now, on Bitcoin's price chart, we didn't see Bitcoin rally into the death cross. We're seeing Bitcoin rally after the death cross. And because we saw Bitcoin's price spike so quick from $26,000 to $35,000, we can see the 50 moving average turning back around, similar to what we saw back here in February of 2020, right before COVID took place, where we saw Bitcoin rally all the way up. It crossed above the 200 moving average. It was above the 50 moving average. And then we saw a golden cross take place, followed by the black swan event of the death cross right here. So how do you know what to look for when you see golden crosses and death crosses take place? Because just because a golden cross happens doesn't mean we're going to go into a massive bull run. And just because a death cross happens doesn't mean we're going to immediately go into a bear market or a much bigger correction. Because on Bitcoin, where we see a death cross happening right now, similar to what happened in October of 2019, on XRP, we're seeing a golden cross take place where the 50 is crossing above the 200. Similar to what happened to XRP back in November of 2020, well, we saw a rally up, the lawsuit hit, the price dropped, then we rallied after the golden cross. So very similar during the golden cross, well, that's right when Ripple won the lawsuit. Then the price crashed back down to 46 cents, and now we're seeing the rally start again. So are we going to go up for XRP? Are we going to consolidate sideways, or are we going to go back down? Well, in order to understand what's going to happen in the short term, medium term, or long term, you use different moving averages. So there's long-term investing, there's intermediate trades, or short-term swing trades. These are the three most common ways of trading because of the slow moving nature of the traditional simple moving average, the SMA. Analysts started to look for a solution that provides faster signals. This is how the variety of moving averages were born. So we're gonna take a look at some of the most common ones, but in this video, we're just gonna talk about the simple moving averages because I don't want to overwhelm you getting into weighted moving average, then exponential moving averages, and then even some other ones. But what does SMA mean? Well, the simple moving average is calculated based on the closing price of a period. A period means a candle. So for example, the closing price of 3 periods or 3 candles is summed up and then divided by 3. Every period in the calculation has the same weight, unlike the weighted moving average. And this is generally the easiest to understand because if you have 3 periods of, let's say, a $50 close, a $45 close, and a $60 close, well, you would add those up. That'd be 155. You divide that by 3. So that'd be 51.66 as a 3 simple moving average. So the simple moving average is very smooth and it's at its strongest as a long-term indicator on any time frame. So if we're looking on the XRP, the US dollar price chart on the 3-day candles right here, we can see a death cross take place when we saw the 50 simple moving average cross below the 200 simple moving average. And we saw a rally from XRP of about 26 cents all the way upwards of 76 cents, rallying into the death cross, then the death cross taking place, and then XRP seeing a drop all the way down for the rest of 2018, 2019, and until March of 2020 when the bottom was formed. And the entire time we saw XRP struggling to stay above the 50 moving average for an extended period of time. And it couldn't even break above the 200 moving average until after COVID, until August. So in terms of macro market investing, the 200 moving average is one of the most popular moving averages, the simple moving average to look at. So in this case, when we saw XRP break out of COVID, close above the 200 moving average, drop back down below it, retest the 50 moving average as support, and then we saw a spring off of it. This was the telltale sign that we were going back into a massive bull run, the spring from November to December. Regardless of the lawsuit happening, XRP rallied all the way upwards of a almost $2, even though it couldn't retest the all-time high. That was just simply because of the SEC and institutional investors not having the green light to put money into XRP. But now everything is shifting, and I do believe long-term XRP is going to be the showstopper for this coming bull run. So where are we right now in terms of looking at this chart? Because we can see a golden cross took place back in November of 2020 when the 200 moving average crossed below the 50 moving average, and XRP rallied right out of that. Lawsuit hit, black swan event. No one could have predicted that happening. Otherwise, XRP, would have probably seen a correction maybe down to 39, 40 cents still, and then rallied out of there either way. But it just saw a deeper correction down to 16 cents because of the fear that spread into the markets. But ultimately, that fear was gobbled up by the whales over in Japan, over in the Middle East, over in China, over in Canada, Australia, all these different countries that could trade crypto. I mean, I don't even know. I'm not from Canada, so you guys let me know if you're from Canada, if you guys can trade crypto. I know sometimes jurisdiction and regulations in other countries, have some limitations. So again, don't buy, don't sell anything. Check the regulations of your country, obviously, and the exchanges if you can trade XRP. But XRP has the most clarity out of any cryptocurrency, along with Bitcoin. And it's the only altcoin that has the clarity right now that it needs to see massive liquidity. But can you turn $10,000 into $1 million with XRP? Or is there a better strategy? Stay tuned. I'm going to talk about this. So when we see the golden cross that took place right here for XRP, we went into a massive bull run, whereas the death cross on the 3 days, comparing the 50 to the 200 moving average, the simple moving average, we saw a bear market. So what happened here? Well, we saw another death cross take place in May of 2022 when FTX was happening, Celsius, Voyager, Terra Luna collapse. Everything was hitting the crypto industry back to back to back. Just lots of negative news out there, lots of fear. Also, the Federal Reserve was tightening on their balance sheet, raising the effective federal funds rate. So it was like the perfect recipe, or I guess you could say the worst recipe for disaster. But for those of you that spotted that and you guys realized that while the market was crashing, you could have caught XRP down at 28 cents. And as we returned back above the 200 moving average, we saw a spike for XRP post lawsuit. Ripple wins. It's a split decision though, whereas XRP itself is not a security, but how it was sold to institutional investors is a security. So the sell-off for XRP was still that institutions don't have the green light to do OTC or buy XRP until there's clarity and a settlement. But the lawsuit's over. It's done. The only thing that's left now is Ripple paying a fine and deciding how much they're going to write a check to the SEC for, and then what happens with the Federal Reserve next. But a good sign here is we saw a golden cross. And so the golden cross took place while XRP was seeing a sell-off post-lawsuit, and with the spot Bitcoin ETF application news, going out there about BlackRock's ETF getting ready to be approved, and Larry Fink coming on publicly and saying that crypto will be that safe haven that people are going to run to, in regarding the overseas conflict that I can't say on YouTube, otherwise the algorithm will, push this video down. But if Larry Fink is bullish, we're heading into the bull run. So we're getting out of spring right now, in the spring thaw. There's going to be some cold days, there's going to be some warm days until we get to summer. Once we hit summer, then we're going to see hope, belief, thrill, and euphoria take place. So where I think we are in terms of XRP's bull market rally is we're like right here, right after this golden cross of 2019. And so yes, we could see another dip. We could see another black swan event. We could see something happen that shakes the market and rattles it. It could be anything. It could be something with WW3. It could be something with, like what happened with the pandemic back in 2020. There could be something coming, but regardless of that happening, the signs are all leading to a massive bull run, massive liquidity coming in over the next few, not only months after Bitcoin's halving, but next few years leading into 2025. So this golden cross, right? I personally feel we're going to be going up. Now, I did make a prediction, another video saying how I do feel we could go to 30 cents at the end of this year. And I also did say that I hope I'm wrong. So it feels good to be wrong sometimes because I'm not right all the time, but I am showing you guys data so you can make your own educated decisions here. So I do feel like XRP's chart could look something like this, where the next massive rally for XRP would put it back up to where, the high of the year was about $1.85, almost $2. We see, price correction, consolidation at that point. And then depending on how deep we go for that, I do feel we're going to break that and retest the all-time high come 2024 post Bitcoin halving. So long-term based on, golden cross, death cross, and the 200 moving average, we're looking bullish. So I do personally feel we're going to keep going up long term, but what about medium term and what about short term? A faster moving average like the WMA or the EMA will give a benefit in short-term trading. For long-term trading, the simple moving average will be smoother, more ideal to look at. So before you start trading based on moving averages, it's important that you understand that more data will always give you a stronger signal. And what does this mean? Well, it means that the daily chart will give a stronger signal than the 15-minute chart. So 1 week is greater than 1 day is greater than 12 hours, 12 hours greater than 4 hours, so on and so forth down to 1 minute. When you're looking at 1 minute, the price fluctuates so much, but you need to zoom out and get a macro market look to understand what's going to happen in the short term or medium term, right? When in doubt, zoom out. So it also means that a moving average will give stronger signals when holding more time, right? So if you have the 3 moving average, the 3 period or 3 candle moving averages versus the 500 moving average, as a result, the lower moving averages will indicate the shorter term trend, the higher moving averages will indicate the longer term trend. So right here on the chart, you can see the 200 moving average in yellow, and then I could turn on and off with the little eye icon, the 50 moving average right here in red, and then also I could turn on and off the 20 moving average in blue. And as you can see, it fluctuates a lot more for the 20 moving average. So it's a lot more difficult to understand where the price is going to go based on the shorter 20 moving average. So that's why it's important to use a longer time frame moving average like the 200 moving average in conjunction with the shorter ones. So to determine which moving average is going to be best for you, well, the faster moving averages like the EMA and the WMA are more used for short-term trading. For example, trades that take less than 1 day or even only a few hours or a few minutes. However, it's hard to tell which ones are the best because technical analysis, it has no right or wrong, right? There's so many different trading strategies. There's so many tools. And we talk about the RSI, Relative Strength Index. We can talk about the MACD. We talk about lots of other indicators. But remember, when you're leveraging risk management, it's the most crucial part of trading. So you make sure that you don't invest more than you can afford to lose. Always use stop loss orders if you're planning on day trading, and understand that you won't be right all of the time. You're going to make some mistakes. That's part of trading. So for me personally, I'm a long-term trader. I'm a long-term holder. I believe in macro market trends and understanding where things are going to go long-term. And then in terms of the short-term, what I do look for is the right projects that I feel have the potential to outperform certain ones like Bitcoin. For example, if I go to Google Trends right here and I search the keyword crypto and I look over the past 5 years, you can see when crypto was the most popular across the globe for people typing it into Google. And as you can see, May 9th through May 15th, crypto was 100 out of 100. Now, you can also search XRP or you can search Bitcoin and you can compare them to each other. So XRP, compared to crypto, wasn't as popular until July 9th through the 15th of 2023, around the time of the lawsuit. Now, one thing that's interesting to know that's super, super important to pay attention to, if you are a macro market investor, is to understand that when we're in the euphoria stage and we're at 100 out of 100, that's when your grandma, your uncle, your plumber, your Uber driver, your Lyft driver, they all know about crypto and they're asking how to get into crypto, or they're already in crypto. That is a bad time to be in crypto. That's not a good time, because when you're at 100 out of 100 in terms of interest, where do you go from there? Down, right? So May 9th through May 15th of 2021, we were right here at the high, $1.95 for XRP. And where were we for Bitcoin? Well, we had already made a high of $65,000. Bitcoin crashed down to $46,975. It broke this upward trending support right here. And we were seeing a dead cat bounce for a complacency bounce right here up to $59,000. So look at this. May 8th of 2021, May 9th, May 10th of 2021, when Bitcoin was $59,000, the interest on Google Trends was 100 out of 100. So the popularity was at the all-time high, but yet Bitcoin was seeing a dead cat bounce and then absolutely tanked after that from $59,000 all the way down to $29,000. So if you would have listened to the masses and you would have let your emotions take over and cause you to buy Bitcoin, and then looking at the moving average right here, seeing a bounce to retest the 50 moving average, we were going down from that point right there. And then also at the same time too, we saw this death cross take place where the 50 moving average crossed below the 200 moving average. So the real high for Bitcoin based on Google Trends in terms of interest was actually the first peak of Bitcoin on May 9th. And then you see right here in terms of Google Trends, 73 out of 100, October 31st through November 6th. That was right here for Bitcoin's actual all-time high. So by the time Bitcoin was passing the high of May, well, then people weren't as interested anymore. And then that's when we saw the markets crash from down there. And so we're most likely, again, I could be wrong here, but we're most likely going to see something play out somewhat similar for this next bull run. And you're watching this video right now, 2 years earlier, so you know what to expect. Because where are we right now? We are at 10 out of 100. We're at the bottom. That's a good sign. So what that means, in my opinion, is where we're going from here is up. So a lot of people are saying that we're going to Goblin Town, Bitcoin's dropping to 10K, XRP's going to nothing, and they're spreading a lot of fear. Well, why would they be spreading fear? They would be spreading fear because the mass psychology of people right now is a little bit of fear. Not a little bit, honestly, a lot of fear. If we're at 10 out of 100, it means there's more fear on a macro market scale, or at least more disinterest where people just aren't interested, which is still, in my opinion, the same thing as fear in terms of the effect on the price, where once we start to see the interest go up on Google and the ETFs get approved, and all of a sudden now JP Morgan Chase is starting to offer ETFs. We see Wells Fargo starting to offer ETFs. Bank of America, all of a sudden now it's hitting mainstream media. Larry Fink from BlackRock, he gives a call to the media companies that he controls and he says, all right, hey, we're going to put out 20 articles. We're going to put out 20 articles to this company, 50 articles to these companies. We're going to put out articles over here and articles over there saying now's the time to get into crypto. Then what happens? The search volume on Google Trends goes up. Everyone starts piling in again. And we just start to see massive price appreciation. Now, that doesn't guarantee that's going to happen, obviously. But then we look right here for XRP. Let's look at golden cross and a death cross in terms of the simple moving average on the 20. And then let's compare that to the 50. So you can see right here in blue, this is the 20 simple moving average. In red, this is the 50. So we saw a death cross take place right here. And that was after the low. So the price was selling off into the death cross. And then once the death cross actually happened, we saw the price rally out of here. We saw a golden cross happen. So the price was rallying into the golden cross. Once the golden cross took place, the price started selling off after the golden cross. Now we had a death cross take place right here. Well, when did the last death cross take place? Well, that was after the low was in. So could the low of XRP already be in and we're not even going to go down any further? That very well could be true, and we could rally out of here. Now, that's going to depend on Bitcoin, but I do think that we are bullish right now. I do think Bitcoin is going to go up, and I do think we're going to see the most amount of money come into the crypto market than ever before for this bull run. And I do feel XRP is going to perform very, very well. Now, will you turn $10,000 into over $1 million with XRP? In order for that to happen, XRP's market cap would need to 100x from right here. So it would need to go from $30 billion to over $3 trillion. Now, if that were to happen, XRP holds less than 5% of Bitcoin's market cap. So if XRP holds just 5 or let's say 6% hypothetically of Bitcoin's market cap, and XRP was at 3 trillion, well then Bitcoin's market cap would need to be at $50 trillion to give XRP a 6% weighted share of Bitcoin's total market cap. So there would need to be over $50 trillion to come into this industry, this bull run, for XRP to pull 100x. Or XRP's dominance in terms of the total market cap that it holds in comparison to Bitcoin would need to grow in comparison to Bitcoin. So all that means is 30 billion in comparison to 667 billion. XRP would need to get closer to that as the whole market grows. So when Bitcoin grows, the whole market grows. So will XRP perform 100x during this bull market cycle? Now, I don't think that's going to happen. It could. Again, I could be wrong there, but I do think there's going to be higher percentage gains for the medium to micro cap projects. And so if you guys do want to see which projects I am personally bullish on, yes, I do hold XRP. It's actually one of the largest portion of my portfolio, but there are other projects that I am bullish on that I do think have the potential to outperform Bitcoin and XRP for this bull run cycle. So if you want to get access to that list when it comes out to see what I'm holding in my portfolio, then all you got to do is go to bullrunners.com and you'll discover our best ways to make money online without any previous trading experience. All you got to do is click the button on the page, subscribe to our video newsletter. You'll be on the early bird list to be notified first when we launch our financial education platform to give you the best information to help you prepare for the worst that's yet to come in this economy. Because the spending power of the dollar is continuing to go down in value. That's a fact based on inflation. Blockchain technology, distributed ledger technology, and cryptocurrencies are going up in interest. Right now, that's the truth. And together, we're all going camping, You know where? On the beaches of the moon. So I'll see you on the next video. I will see you on bullrunners.com. Go there right now. And as always, you know what to do. Stay bullish.